Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. I'm your host, Matt Sands, and I'm joined by my co-host, Justin Williams, and we're here to help you make the most of your minerals and royalties. And in this week's episode, we're going to talk about listener questions for August of 2024. We have some really interesting questions this month, Justin.
We do, Matt. Yeah, it kind of gets into the nuts and bolts of things you see as a mineral owner, and then some general questions about lineage and that kind of thing that come up quite a bit in different scenarios.
Absolutely. And these are very common questions. So if you are in the boat of some of these listeners that have submitted their questions, just realize you're not alone. And even if we don't cover your question this week and you have a question you'd like help with, you can send an email to feedback@mineralrightspodcast.com. Over time, we will work through all of the questions and get you an answer either via email or on the show. And, I think, Justin, that the thing that I really took away from this month's questions was, to your point earlier, is that they're just like very common questions, very similar questions. Maybe there's some nuance from state to state that you may deal with, but the underlying question itself and the answer is generally pretty similar. So let's just go ahead and dive in, because we'll get into some real interesting conversation and some discussion as we go through these.
Let's do it, Matt. So our first one here is from Pam. Pam says, I'm receiving royalties from the Marcellus Shale in Pennsylvania. While I used to get monthly checks from 5 different companies, last year I only received from 2 1/3 a couple of months. One of the companies threw me into negative status for several months because they say the court in Pennsylvania has upheld them being able to deduct less than they had not previously. My question then is, can I claim a loss on that negative account? They're still taking the gas, but yet I'm not being compensated. I'm being charged. When Pam says thanks there. And Matt, this is something that beginning of last year or a few months before that, we dealt with this quite a bit when we were having some price fluctuations that caused negative checks.
This is really an interesting one because I've experienced this on natural gas royalties. I've gotten negative royalties on gas, but then that was offset by positive amount from the oil and the plant products. And so my total check was positive. So I'm kind of surprised, Pam, that they're able to do that. I would think that your exposure would be limited. You get paid a royalty. So in my mind, that's like a commission, so to speak, on the sale of the gas. And if the fees were to exceed the price of the gas that they received, I would think that they couldn't go negative totally on you. So that is really interesting. And it might be, Justin, you had this point when we were discussing this before we hit record, that it could be that it was a prior period adjustment, that maybe they're going back retroactively and deducting these fees from your royalties from previous months. And so for one given month, you have a negative amount because you're, in their mind, overpaid from previous payments. And so that is something that operators can do generally, and that'll show up as a prior period adjustment. So that ability to retroactively or over previous time periods you've already been paid to make adjustments. And usually it's because of small adjustments to the amount that was sold or the amount that they received for the product. But it can include things like reinterpreting the lease. Maybe they interpreted it wrong and they have to go back and correct that. And it sounds like that might be what they're attempting to do. I would consult with an attorney just to understand your rights and to make sure that what they're doing is allowable, because I would think that you would not be able to, as a royalty owner, again, maybe there's some nuance we're missing here. It's hard to tell because we don't have a copy of your oil and gas lease. We can't read the language. We don't understand what type of an interest you have. Assuming it's a flat mineral interest and they're just deducting post-production deductions and that's the reason, then seems to me that I would definitely check with an attorney just to understand your rights and understand that, can they actually do this? Because to my mind, it would be something where I would expect you to be, maybe you don't get paid anything for a month because the fees exceeded the amount they received, but they shouldn't be able to pass that beyond that to the royalty owner. But again, each state is different. I know Pennsylvania is in particular unique as well because there have been several cases, and in particular, I know there was a case with Chesapeake Energy that the Attorney General settled, I think, in 2021, that allowed some of the owners to renegotiate their leases because the predatory practices that they found Chesapeake to have, and there was a market enhancement clause in the leases that allowed them to deduct the cost of preparing the gas to market from royalties, and the settlement required that Chesapeake drop that language in future leases, and also allowed for some of the owners to go back and renegotiate a lease. And so that's pretty uncommon that you're able to go and renegotiate a lease after the fact. But if your lease was originally with Chesapeake, you might check with your attorney to see if you might be able to renegotiate the lease if you were part of that settlement. Now, the other thing too is I know there's been some proposed legislation there to try to cap the post-production deductions. There's a minimum royalty amount of 12.5%. And there's a talk of trying to get that to include any post-production deductions. So for example, if you had a lease of like 18% royalty or whatever it is, that they could only deduct those post-production deductions up to where you would get a positive 12.5% royalty from resulting net royalty that you received. I'm not sure where that ended up. And again, that's probably a better question for an attorney because I'm not really that familiar with the specifics in Pennsylvania around that legislation or that case law. Another thing too is, so let's say the other side of that, you go through the process, you talk to your attorney and they say, okay, yeah, they can do that because it's, allowed because of this recent case that was decided. Then you could talk to your CPA about being able to deduct those expenses, because if you're not receiving positive income from this, you shouldn't be paying taxes on the gross income and then not be able to deduct those fees that were deducted. And so when you go to file your taxes, that might be where you would get made whole. In other words, you would get to deduct those from that income. So in essence, you would get a tax credit or a deduction. Again, limitations on that because generally royalties are passive income and you generally can only offset other passive gains if you have a passive loss. But in your case, it's going to be very specific to you. Check with your CPA that's familiar with oil and gas taxation to make sure that you're handling that correctly, to make sure you take advantage of whatever types of deductions you can. But I don't know, Justin, it's sort of a tricky situation here, I think.
Yeah, you said it, Matt. And, I think a lot of mineral owners, if things are typical, then they can use just about anybody to file their taxes as anybody would. But when these specific questions come up, having a tax individual who is aware of minerals can be really valuable to help understand these, because they do get complicated, as you said, Matt, and it really depends on her situation. So that's a great place to start, is if you don't have one, try to find one that's familiar and get their advice on this, along with an attorney, Matt, as you mentioned, to see what's really going on here and why.
Absolutely.
All right, Matt. So our next one here is from Les. Les says, we own mineral rights in Reagan County, where we have vertical wells. Can an oil company drill from Glass Rock County horizontally under our lease and tap our resources? We have a percentage of the Hellwig lease, 171 acres, and the horizontal wells are passing all the way through our lease from 2 miles away. The company shares in the Hellwig lease as well as the other. Pioneer has the majority of the Hellwig lease in Reagan County. We receive a very small percent from the vertical wells that have been there for many years. Now Pioneer drilled 2 wells from over 2 miles away and claim we have no rights. And he gives some details here, Matt, on the well itself and everything. But again, a very common thing that comes up.
Yeah, this is very common. And this is, what we talk about in our video series that we did on most of the major oil and gas producing states, where we walk through step by step how to find this information out using that state website. In the case of Texas, it's the Texas Railroad Commission. We'll link to the video on my YouTube channel in the show notes. So if you haven't seen it yet and you have minerals in Texas and you have this question, then definitely check out that video, because I show you how to find out information about your wells. In particular, what you would want to do is download a copy of the plat for that well. So when they file for the drilling permit, they provide an application as well as some supporting documentation, including a map, which is basically what that plat is. And it shows the outline of that lease itself and the tracks, the mineral tracks that are part of that lease. And so if you can tell from that, with your legal description, where your minerals are with respect to those wells that are being proposed. And then you can determine whether or not you should have an interest in those new horizontal wells in this case. And that's what I told Les in my email response to him, because I pulled the drilling permit in the plat for one of those, the Holscher 3446 wells. And it does look like those wells go through the Hellwig lease. And so if you're in pay status on the Hellwig lease, you should probably have an interest in the Holscher wells because of the way that Texas pools those minerals together. In this case, I believe your interests were an allocation well, if I remember correctly. And so there are a couple different explanations. And I know in this particular case, I looked a little bit further. The vertical wells were producing from the same formation as this new Holscher unit, which is the Sprayberry formation. Oftentimes, if you had a lease, let's say, for example, or if you had an overriding royalty that was limited to a certain depth. So let's say in this case, you had an override, it was limited to the base of the Sprayberry formation. Your vertical wells were producing from the Sprayberry, but then these horizontal wells were producing from a lower formation like the Wolfcamp. In that situation, you wouldn't have an interest in those Wolfcamp wells because you have a depth restriction on that original lease that your override was carved out from. So in that situation, there's an explanation for why you wouldn't receive royalties from those new horizontal wells. But in this case, that doesn't appear to be the case. I would check with Pioneer to see, ask them a question, say, hey, I'm pay status on these Hellwig vertical wells. I believe I should have an interest in the Holscher wells. Tell me why I'm not getting paid or what's going on. So, and you mentioned that those wells were drilled 2 years ago. Usually, if you're already in pay status when they do the drilling, the title opinion and the division order title opinion, you would have been included in that. They would have included you in the pay deck and you would have gotten the division orders. If you're not getting paid royalties, it could be that they sent you the division orders, but those didn't get delivered for whatever reason. Maybe they sent it to the wrong address, or maybe you lost the division orders and didn't return them. And that's why they're waiting to pay you, because you have, in Texas is the one state that you have to return division orders in order to be put into pay status. And so contacting Pioneer would be the first step for sure, just to find out why you're not getting paid, what information they might need, if anything, in order to put you into pay status. But, I will say that, again, looking at the face value, which you would have to look at the productive lateral length that goes through your mineral tract to determine what fraction of those new wells you should have an interest in. And that's because of the way that Texas manages this with the allocation wells. It's usually that productive lateral length through your lease or through your particular mineral tract, and then you multiplied by your fraction of the minerals and then your royalty rate to figure out what your decimal interest in those wells should be. And again, asking for more documentation from Pioneer would be the first step, and just finding how they calculated that. And then you can use that to make sure that it looks correct. And again, we covered this in a lot more detail on how to do this type of research on your own in terms of researching the title and looking at your oil and gas lease, getting a copy from your county clerk and recorder's office of your deeds, any previous deeds or leases that might affect title. Also, how to go through and find those interests on a map, reading a legal description, all the documents you should have and how to organize them. All of that is covered in my Mineral Management Basics course, which we'll link to in the show notes as well. So hope this helps, and good luck.
Good luck, Les. All right, our next question here is from Rebecca. Rebecca says, I'm just not responding to one of your emails and very much regret not becoming more active before now. My family has a royalty interest in Louisiana, and the current producer being Diversified Energy. We inherited this interest and they can't seem to find it into the lease, which has been bought and sold multiple times over the past 15 years or so. We do not get much in the way of royalty payment. However, every bit helps. How do I go about finding a financially reasonable attorney? Any suggestions you may have would be appreciated. And she's having difficulty understanding how this lease cannot have an end date. So Matt, Louisiana is very different. A lot of questions here to kind of break down and cover.
Absolutely. Yeah, that's a great point. Louisiana is very different. We'll just talk about that real quick. And then at the end, we'll wrap it up with how to go and find a qualified attorney, and hopefully one that's reasonably affordable. But as far as Louisiana, it's a state with dormant mineral statutes. So in other words, there is a time period by which the severed mineral rights can expire and revert back to the surface owner. In Louisiana, they have a specific term for these severed mineral rights and calling it mineral servitude. And so that's a similar concept to severed mineral rights that we talk about in other states. So Louisiana is very different from a legal perspective than the rest of the country. But the thing what you got to know with the dormant mineral servitude statutes is they have very specific situations that will trigger the expiration of the mineral servitude. One of those is where you have 10 years of non-use. In other words, if you don't have production going on. There are other things like if you forfeit it, if you decide to, basically terminate it, if it's a term mineral servitude, in other words, it has a finite time limit. And then there's a bunch of other conditions, but not really relevant for this situation or this question. So in this case, the reason I mentioned this, Rebecca, is because, it's a good thing that your lease is held by production and that there isn't an end to that, because if it were to terminate, for example, if those current wells you're getting paid royalties on were to be plugged and abandoned and they don't drill new wells, then your mineral servitude will go away. And so it's a good thing that you have that lease that's continuing to be held by production, is what that's called. And just a little bit of background, because I get this question a lot from new mineral owners that say, hey, I found that my ancestor signed a lease and why am I not able to lease this again? Or why is this still going on? And that's because oil and gas leases contain a primary term, which is the time period that the lessee has to basically drill a well. Once they drill a well and they establish production in paying quantities, in other words, it has to be an economic well, and that lease is termed to be held by production. And so then at that point, the lease transitions into the secondary term, and it will continue as long as, again, there's production in paying quantities from that lease. And that could mean that many different wells get drilled over time, and it might be 50 years from now that, they'll continue to produce. And so you'll continue to pay royalties over that time period. And in your case, it sounds like production was established and the lease and those associated wells were sold several times to different operators. And generally, the mineral owner doesn't really have a say in who buys that lease. You're sort of at the mercy of what the operator decides to do. If they decide to sell it to another operator, they'll send you a division order, send you a letter that says, hey, we're the new operator of this well. Send us back this tax forms and, sign this division order and we'll start to pay you royalties. And, each time that happens, it's a trigger to make sure that your decimal interest is correct and make sure that you don't see a big jump in post-production deductions and things like that. So there's some things that you can do as a royalty owner to protect your rights in that case, but you really don't have control over that. And, there's, unless it's spelled out in the lease, and you're only going to be able to do that if you have an extremely large number of net acres, like you have the King Ranch in Texas, and they're coming to lease all of your tens of thousands or hundreds of thousands of acres, and you can negotiate sort of whatever you want, because otherwise that's the only way that they're going to get in there and drill wells, is because they're dealing with one landowner. In most cases that, we don't really have a say. And so that's sort of, it is what it is. But again, I think that's probably the biggest takeaway is be thankful you have actually royalties from these wells. Production was established and it's continued. And so that's why you were able to inherit these, and it didn't revert back to the surface owner, assuming you're not the surface owner. If you are the surface owner, then I guess you would still continue to have that benefit. But that's why your lease doesn't have an end date. And then as far as like finding an attorney that is qualified to help you with some of these types of questions, I would become a member of NARO, the National Association of Royalty Owners. They have a Louisiana chapter. There are board members that are attorneys, and you can reach out to the state chapter president for a referral, and they can put you in touch with somebody in that state who can help you take a look at your interest and any rights that you might have. So, Justin, anything else to add on that?
No, man, I think you covered it pretty well. I think NARO would really help if you're in the early stages of learning about mineral rights to point you in the right direction and start putting your documents together. That was something when I started out, that finding those documents and starting to assemble those really helped, not only when maybe the property was bought and sold and I had to reestablish that I had the correct decimal interest, but also just to understand what the ownership actually was.
Yeah, that's a great point as well.
All right, Matt. So our next one's here from YouTube, which this is the first time we feature questions from YouTube. We've been putting in quite a bit of effort, Matt, on getting those up and having that video series. So the first question here is from Buttercup7. Hi, we signed a lease in 2011, and it says in terms, after 5 years, they would pay the original bonus plus 10% and continue for 5 more years. It's 2024 and they haven't paid said bonus. What should I do? And Matt, this answer is very similar to our last question here, but we're not sure what state this is. But again, if it's held by production, then that bonus wouldn't necessarily apply.
Yeah, exactly. If it's held by production, so that's, in other words, assuming a well was drilled during that primary term before it expired in 2016, then they don't need to pay that additional bonus to extend the lease because it already transitioned into the secondary term and it'll be held by production as long as production continues in paying quantities. I will say also, it could be that they originally leased it. They had plans at that time to drill. They learned more information. Maybe it wasn't economic to drill in your area, and they decided to let the lease expire. And they didn't decide to extend the lease by another primary term and paying you that additional 110% a lease bonus. So it's that could be, it's one of those two things. So if you're not receiving royalties, it's the second condition. In other words, that they let the lease expire and they just decided to not drill a well. So you have the option to go and lease again. If again, there's interest in your area, if there's drilling and then that's something that you'll be able to do. But yeah, just could be one of those two things. And that would be why they didn't pay you that.
You said it, man. And our next one here is from Greg. Greg says, do you often come across mineral right portfolios for sale? It looks like you acquire and value mineral rights through Silver Heels Investment. I'm looking to acquire some interest in them, just getting into the space personally. I have worked in oil and gas deals before with institutional capital, but would self-rate myself as knowledgeable but inexperienced. So, Matt, this is an interesting question. And Silver Heels Investment is your company, Matt, and for those that don't know.
Yeah. So thanks for your email, Greg. I will say I don't put together and sort of do that, in terms of brokering mineral rights portfolios, but I do have clients that I help, advise through sale process and in general have helped with other investors, just in terms of education and understanding how to go out and identify properties for sale, whether that's through platforms like EnergyNet or doing the ground game, so to speak, on your own and identifying those mineral and royalty owners and contacting them to make an offer to purchase. And so it is something that I could help if you have a question and you want to understand more about how to do that on your own. I can help with the education portion of that. The mineral management basics course that I put together is essentially the very high level, first steps of due diligence that I do for mineral investments. And so if you're wanting to understand, more about the nuts and bolts of minerals and royalties, how to do a title search, which is very relevant for investing in minerals and royalties and making sure that a potential seller owns what they say they own, that's something you would need to do or have somebody do for you. And also going to the State Oil and Gas Commission and doing the research and identifying where operators are permitting and drilling wells and what does the well performance look like, how much oil and gas are they producing from an individual well, and what do the economics look like. You can derive all of that from information at the State Oil and Gas Commission level. And so that's where that course can come in handy. So highly recommend that if you're thinking about investing. Those are things you would need to really have a good working knowledge of, whether you're doing the work yourself or you hire advisors to do some of that work for you. That's kind of how I look at. And when I do that one-on-one coaching, that's like curriculum largely that I use to help educate my clients. So yeah, and then, from a consulting perspective, also do evaluations and appraisal. So if you find a deal you're looking at and you want a second opinion on what it might be worth, that's where I can help out as well. So good luck, Greg. Appreciate the email.
All right, man. Our next one here is from Al. And Al had a couple suggestions for podcast topics, mostly relating around API numbers. He says that his operator doesn't provide the API number revenue statements, only provide their custom property name and property ID. And he's wondering how he can associate a operator's property name and ID to an API number. And Matt, some of the questions we talked about before, the State Oil and Gas Commission website is going to be your best friend here. You could take that legal land description, find out what wells these are, and I'm sure you'll find some kind of link between the name and that kind of thing. And from there, you could have that API number.
Yeah, exactly. And then, one place you could throw that into a spreadsheet so you can write down, keep track of all of the wells you're getting paid on with the operator's name that they're calling it, the property name, their property ID in their system, and what the API number is. And you can put other things like the legal description, maybe your decimal interest. So that's a good way to sort of have a permanent record, so to speak, of all of the wells you're in pay status on. And then that can be a good source of information for your heirs. When they get to inherit these, you can have like one place where here's all the wells we're getting paid royalties on. Here's the information. Here's how to find out production and what's going on. You can have links in there to the State Oil and Gas Commission website. So that would be what I would do, Al. Unfortunately, there's really no consistent naming convention across operators or other way that I've found to associate their internal ID to an API number. And that's because, each operator may have a different accounting system that they're using. It may be that it's well number 001 or 10,001. And, just internally, how many wells they operate and where does that fit into their database versus the API number, which is a unique identifier across the globe. And if you know the API number, you know that it's associated with that unique well. And we'll link to more information on that. We talked about the API number in previous episodes and how that is set up and how you can read it and determine, the state and county just from looking at the numbers in the API number, and then the unique well identifier, which will tell you which specific well within that state and county that we're talking about. But yeah, I would just say, like Justin said, State Oil and Gas Commission website, find your property, look up your wells, copy that API number down onto a spreadsheet, and then have a record on your computer that has that in one place would be the way I would do it. So yeah, thanks again for writing in, everyone. And again, if you have a question you'd like us to answer, send it to feedback@mineralrightspodcast.com. And again, to find links to the references and the resources we mentioned in this episode, you can find those in the show notes at mineralrightspodcast.com. Thanks again, Justin.
Thanks, Matt.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.